So, you're ready to buy a home. Awesome. But there's that one big question hanging over your head. What credit score do you actually need to get a great deal on your mortgage? You've probably seen a million different numbers online, but what are lenders really looking for? Stick with me because I'm about to pull back the curtain and show you the exact credit score that separates a good mortgage from a great one. Before we get to the magic number, let's quickly cover why your credit score is the first thing a lender looks at. Think of your score as a summary of your financial habits. To a lender, a high score means you're a reliable, low-risk borrower. A low score, that signals a higher risk that you might miss payments, and that risk gets priced right into your interest rate. The difference isn't just a few bucks either. Borrowers with scores in the high 700s can save a massive amount of money on a 30-year mortgage compared to someone with a score in the low 600s. Let's make it real. Imagine two people are buying a $400,000 home. One has a 760 credit score and the other has a 630. Based on rate examples, the person with the higher score might get a rate around 7.24%, while the other gets a rate closer to 7.84%. That doesn't sound like a huge gap, right? But over 30 years, that person with the lower score could pay over $60,000 more in interest. That's a brand new luxury car just because of a 3-digit number. This is why getting your credit in shape before you apply is one of the smartest things you can do. All right, so what's the number lenders are hoping to see? The score that unlocks the best of the best mortgage rates is generally 740 or higher. When a lender sees that, they know you've got excellent credit and are likely to offer you their most competitive rates. But hey, don't freak out if you're not there. You don't need a perfect 850. Mortgage rates usually work in tiers, often in 20-point chunks. While 740 plus gets you into that top tier, a score from 700 to 739 is still considered very good, and 680 to 6999 is solid. The minimum for many conventional loans is 620, but you should treat that as the absolute floor, not your goal. Every point you can add helps you climb into a better tier and saves you money. Now, here's a super important tip. The score you see on your free credit app probably isn't the score your lender will use. Most of those apps show a Vantage score, but the vast majority of mortgage lenders use older FICO score models. Specifically, they often use FICO score 2, 4, and 5. They'll pull a report from all 3 major credit bureaus, Experian, Equifax, and TransUnion, and typically use your middle score to make a decision. By the way, I have good news for you. You can check your credit score right now just in a few minutes with a trusted credit monitoring service. You'll get access to your full credit report, FICO score, and real-time alerts for any major changes, all in one place. And the most exciting part? It won't drain your wallet. It's almost free. I have given the links in the video description. Go check them out. While your credit score is definitely the star of the show, it's not the only thing lenders care about. They'll also look at your debt-to-income ratio, DTI, which is just your monthly debt payments compared to your gross monthly income. They'll also check out your job history, your income, and how much cash you have saved for a down payment and closing costs. But at the end of the day, your credit score gets your foot in the door and pretty much sets the price you'll pay. It's the key to the whole thing. So, let's bring it all home. That magic number for the very best mortgage rates is a credit score of 740 or higher. But even if you can get your score above 700, you'll be in a strong position. And remember, lenders are looking at specific older FICO models and using your middle score, not the one you see on Credit Karma.